Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, February the 9th. The year is 2021. Let's talk trading. Looking up and down part two with Walmal. Yesterday, as usual, we ran out of time. And just so you know, these videos are for educational purposes only. Your results may differ from mine. Okay, Walmal, looking up and down. What else did you want to tell the boys and girls and non-binary traders out there?
Well, I'll change the subject on you a little bit just for some humor. This morning when I started trading, it was looking pretty down for me because I wasn't doing things very well. But now it's actually looking pretty good, looking pretty up. So that's another way of looking at it.
Yeah.
It came across my mind. and the thing is, it was looking pretty down this morning because, to be honest with you, I wasn't going and paying attention to my trading plan. I messed up. I followed all the rules of my trading plan except for one, and that's what got me in trouble. And that's what plays into looking up and looking down. Because one of the things that happens is one of my rules of my trading plan is that I need to be going and actually watching the market for a good. I think I say in my trading plan 20 to 30 minutes. Don't take a trade. Just watch and see how the market's moving, and then that way you get in sync a little bit with the market and how the market's moving. And the pound, when I got up, the pound dollar, what it was doing was it was jumping up and it was jumping down. I mean, it was flashing sometimes 3-4 pips, instantaneously. In fact, I took one trade where I went into the short and I literally pushed the button and was immediately down 7 pips. I mean, I didn't even see it move. It just immediately put me in 7 pips underwater, and I can't get upset about that. That's the market, But if I had been paying attention to what the market was doing and just watching what it was doing, and part of that was the up and down as well, because, if I had spent some more time looking at the market and paying attention to the market, I would have noticed some things. And, on that particular trade that I went short on, if I would have looked and paid attention, right above me was an area that had been heavily contested in the past. And if I had just looked up, and I didn't look up. I didn't go. I had a line on the chart, big solid line saying, okay, potential problem here, and I went and took the trade anyway because I didn't follow the trading plan and I didn't look up. And because I didn't look up, I had my head chopped off. And that's trading, though, and that's the thing. You can't get upset about that. What do? Okay, I did follow my trading plan in every other respect, and that is that I didn't go and over leverage myself. I didn't go and put myself in a position where I was going to go and that's the last trade I can take for the entire day, and I got to wait till tomorrow to trade again. I didn't put myself into a position where that's the last trade I ever can take because I wasted all my capital. So. Thank goodness for that. I went and did all those things right. But it just shows you how important your trading plan can be, and to look up and see what's above your head, see what's below your feet, and make your decisions based on that.
So, I'm just wondering if the traders understand that, we look at these candles, and a lot of times you and I were looking at the M1 candles, and, they do just definitely just paint sometimes. In fact, I'm bringing up the M1 chart here on the pound dollar, and I'm first thing caught my eye was there was a gap up here. I don't know, maybe a couple of hours ago or so. Let's see, what was that bar? Let's see, 1848, which so that's about half an hour or so ago. And no, yeah, whatever. But you can see here there was this gap, and we know how the market likes to fill these gaps. So, and just like there was a gap up right here, and then the market came back and filled it. So it's little things like that, look up, look down, look left, where you can see these little trading opportunities.
Yeah, in fact, it's funny because I actually went and took a trade, at that spot that you're talking about at the bottom there. And actually I waited for the red candle to actually close, and then I went and took the high of that, and then it was that's nice, a candle or so later it went and jumped up for me, and what happened was it ran all the way up and only got up maybe a couple pips, and then it flashed right back down on me. And luckily, I was able to get out of that trade with I think I got like a half a pip or something like that. But that's again a situation where I tried to take advantage, but the market sometimes just doesn't smile on you, and hopefully you're on your game and you're able to get out very quickly.
Right. And one thing about looking up is, if you do trade on an M1 or M5 chart, every now and then you might want to just switch it over to a daily chart or switch it to the monthly chart and take a look, because I think yesterday you called, if price got below something, it was got above, what was it, 37.80 or something, or 70, yeah. I think you called that, and you said if it got above that number, it was off to the races.
Yeah, and the thing is, looking at a one-minute chart, the reality is you can't see that, not unless you got a monitor that's like 20 feet long. You really can't see that. Yeah. And so you need to go and get some perspective. The thing is, the hourly chart, all it's doing is condensing all those 1 minute candles together.
Right.
Okay, that's all it's doing. It's condensing them together. Price is price on no matter what chart you're on. But what a bigger time frame can do for you is let you see what has happened in the past. And knowing what has happened in the past, it can go and say, hey, if it gets to this level and it breaks this level, you know what? I got lots of white space above it. I got lots of space that it can continue running, because there's nothing there to prevent it from continuing in that direction. Or you can go and say, if I break this level, it's still going to have another problem, maybe only 3 pips away. So maybe it's not a good idea to go long here, because it's going to, I'm going to go and get into a fight, and as soon as I win that fight, I'm going to get into another fight, and as soon as I win that fight, I'm going to get into another fight, and you're going to, you're scrapping your way up. And sometimes that's, eventually you're going to lose, and then you may lose big. So I like to go and say, hey, you know what? If I go win this fight, I'm willing to take on a fight. But if I win this fight, I got a potential that this thing can run for a little bit. That just makes it the day a lot more pleasurable usually.
Yes, it does.
And you can't. And sometimes, you know what, you can have days where you wind up in an area during the day where this is the only time of the day that you can go and trade, and the day is ranging back and forth, and so there's no uncovered areas. Everything is covered with candles. Well, that's okay, but just understand that's the type of trading you have to do. And sort of like, in those times, it's sort of like, I'm going to go in. If it goes my way, I'm going to grab my pip. If it doesn't go my way, I'm going to go and get out and minimize my loss.
Yeah, and I want to point out something to the traders out there. Okay, we're on the monthly chart right now, and you can clearly see this level at the 37, call it 37.70, and we've broken that level. We're at 94 at the moment. But if you looked at the weekly chart, you don't see that level. It's not there to be seen. And of course, it's not there on the daily. So that's how, looking up, you can almost call it moving up. You're moving up to the time frame so you can see more, get a big picture map of what price is done. Once again, just looking for these little clues. In other words, right here at that 70 level, that's 24 pips, below. I mean, that'd be a nice trade. That one trade for the day could have paid off 24 pips. I mean, who wouldn't want that, right?
It'd be a nice trade. You'll certainly line your pockets a little bit.
And so, if we go and we say we go down to the H1 chart, and we can see that 70 line, what happened? You can see the fight that was put up there. There was 1 hour that ran 20-some pips. It broke through to 70, closed above 80, and then price came back down through the 70, touched the 70 and bounced. Went through the 70 again, went through the 70 again, went through the 70, and then came back up, and then touched it once again and once again. So all that action, all from that one number, once again, looking up, looking at that monthly chart, and you can just see all of this action here. So there was money to be made just trading that 70 breakout line.
Yeah, back and forth. You could have made a lot of money. And my hope is, and of course, hope is not a trading plan, but my hope is that this market turns around and comes back down there again. Because if there was a lot of fighting going on down there before, you know what? Tomorrow I may be able to make a bunch of money down there because there's an opportunity. I know it's going to have some problems there, and I can go and perhaps go and make some money off of the crossing of that line or the rejection of that line.
Yes, definitely.
And that's part of that look up and look down too. It's looking on a chart. Okay, I've seen that there's, another place that you can go and look, just looking on the hourly chart. But this area right around 80, 85 to, somewhere around 90, we've had a couple of spikes that spiked up there. We had an open there, obviously a close there as well. So there's been some action right around that area too. So maybe this big current hour comes back down there, and maybe next hour we can go and take a trade off of that. I don't know. That you look for those places so that you have some spots on the chart. You say, hey, there's usually some action around that spot. Look for that action. Once you have a signal that says, hey, go long or go short at that spot, take it, because you know that in the past when it's gotten there, it's rejected off of it or it's blasted through it. So knowing that, once I have a signal, that looking for those lines, looking up and down for those lines, that's not the signal. All that's telling you is that that's an area, what I call an area of interest. That's an area that, traders in the past, for whatever reason, have made that an area that they're concerned about. And so what I want to do as a trader, I want to go down into that area and be able to look for a signal. And if I get a clear signal, I don't just enter, but I look for a clear signal based on my method, then I'll go and take that trade because I know that there's been action there and it's been a concerning area in the past.
Yeah, and the other thing is, it's like, you call it your area of interest. I thought you called it your sandbox because that's where you want to go play.
Exactly. Well, that's true too.
Yeah. But the other thing is to look, we're only on a 1 minute candle here. But you can see here, if, relatively speaking, you get these big candles. What price does? It likes to return to the open of a big candle. You had a big candle down here, price returned to it. You had a big up candle here, price returned to it. So even on the 1 minute time frame, usually those big candles are something I look on, maybe M15, H1, H4 especially. I look for those, what we've called return bars, and I think I've done a video or two on those return bars. And like I said, lately, we've been talking about let's see if I can find it on one of these charts. We've been talking about order blocks, and I know I could have clicked down here. We have a block here. It's a SB because a sell candle made it, but this is a bullish area. Price left it. You can see here it returned to it 1, 2, 3, 4 times, and then came up, 10 pips or better. Then you had here a buy block where price created that buy block, because this here is a buying candle right here. And then you see price came down reversed, but it hasn't even come back down to this area. So see, sometimes it works and sometimes it doesn't. So you can't take any of these things as gospel, or this is going to work every time, because once again, trading is unique in that way, where something can work one time and then you do the exact same thing and then it doesn't work. It'd be frustrating, like if you were baking a cake and it worked once and it didn't work the second time, or you were changing the oil in your car. Some things where you have this skill that once you master it, it's going to work every time. Trading is not like that at all.
You're exactly right. The thing is, what I was talking about in the beginning of this video, the idea that, you got your trading plan and you follow your trading plan. Well, number one concern in your trading plan is doing what? Managing your risk, managing your trades. That's the most important thing. The second part of it is, if you go and follow a recipe, so to speak, you talk about baking a cake. The thing is, with trading, you don't necessarily get the perfect cake every time. But the thing is, if you go and follow the recipe and do it in every single time, and statistically that your trade is a trade that wins statistically, in the long run, and you've managed your risk, you will be a profitable trader.
Yeah.
There's no question about it.
And once again, traders, the fastest 15 minutes in trading is just about over. So hopefully look up, look down, look left. And just remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over